Hi traders, this is Andrew and I want to show you an example of the bearish base pattern. So first thing we want to do is identify a higher time frame key levels of support or resistance. We're currently looking at a daily chart, and if we have a look at this large swing down, so from the very high down to the low, I'm going to draw our fib tool for the retracement from the high to the low. And if you now take your horizontal line and just move from the top, work your way down, you can see this 50 area right here, okay, where prices actually just hit sort of that area right there. We have the 50% retracement and then this nice level you can see across here holding a support, again a support, now back to resistance. Remember, these are zones that we're dealing with here, so we're not looking at specific numbers, but that's a level there that we can look to on the smaller time frame for a potential pattern. So if we move over to the smaller time frame, let's move to an hourly chart quickly. You can see prices moved up, spiked into that level of resistance. Nice big spike up there. If we move now to the 5-minute chart, you can see the nice rally, prices hit that key level and then it started to break to the downside. Now have a look at this level here. If I just move this horizontal line down, so get rid of this eclipse. If we have a look at this level right here, you can see we have resistance, breaks through, comes back, tests support. Remember, we have our higher time frame resistance from the daily chart right here. So my bias is short. Now what I'm looking for is I'm looking for commitment below this level, and I'm looking to sell on a limit order for price. If it does come back to retest, I want to enter short with a stop loss above the high. And in terms of targets, I want to look to the hourly chart for possible targets. So you can see we've got some areas of support resistance. We've got level in around here. You can see it's held as support, resistance, 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 breaks above, tests support again, and we've got this big spike, and then slightly lower we've got this area in here. You can see here resistance, support, breaks through, comes back, test support, test support. So two areas of interest. The first level would put us around 70 pips, second level about 100 pips. So if we go back now to that 5-minute chart, we now want to put a limit order to sell. If you're looking at these shorter time frame patterns, you really need to be paying attention and be pretty quick on this. So we want to sell it at 57.60 with a stop loss just above the high, so 15, let's call it 17 pips, and a target around this 88 area. Just going to add the spread in, so let's call it 90. So in at 60, and we look at 90, so about 69, 70 pips for a sort of 16, 17 pip risk. Just follow along. You can see price now retraces back to the level, and we've now been taken in on the trade. So now you just need to follow along. You can see price moving off that level pretty nicely. Don't be too aggressive with your stop management either. Remember, we're trading a higher time frame key level of resistance, so we need to give it a bit of space to breathe. Currently up about 20 pips. Okay, now we have had a spike down. Our level has been hit, and you can see we've been taken out for 70 pips, and you actually move down further into the next level. I'll show you that hourly, into the next level of support right there before bouncing. So that's the bearish base for you, found at higher time frame resistance.